Cardano is big and clever, so some analysts say, but it has disappointed so many investors over the years. Its low-level returns is getting quite despicable, and now so many people are getting tired of this ride, thus regretting why they got on the bandwagon in the first place. But what if you zoom out on Cardano? Of course, this strategy looks quite appealing and many ADA investors have tried it. However, now it's wearing thin. If this present situation lingers, there is no doubt that Cardano's future is in shambles. A month ago, it recorded that Cardano's rally has slowed down as on-chain data revealed that the large addresses have been distributing the cryptocurrency. According to a crypto analyst on Twitter, a total of 31 addresses holding large amounts of Cardano have sold off their coins recently. The relevant indicator to this movement is the on-chain analytics firm Sandman's ADA supply distribution, which informs investors about the wallet groups and the number of addresses. The wallet groups define the ranges between which the number of coins of the wallets belonging to them hold. For example, the 100 to 1000 coin groups include all addresses holding at least 100 and at most 1000 ADA. So a supply distribution metric is used for this group. It will evaluate the total number of wallets on the network that are currently fulfilling this condition. Since the amounts are so large, the kind of investors that their wallets are found in this range are sharks and whales. The number of Cardano addresses belonging to the 1 million to 100 million coins was on the rise earlier in the year, and during this period, Cardano ADA started its sharp rally and the price continued to increase as this cohort's address mounted. Whales and sharks are important cohorts in the market as their movements can greatly impact the price. However, in alignment with the gloomy market, the indicator's value reversed and its trend went down instead. This implies that some investors with large amount of addresses were selling off their coins. Since the decrease started, the cohort has lost a total of 31 addresses. The ADA coin price seemed to also slow down recently as well. If investors continue to sell their supplies, then the cryptocurrency could swivel in a bearish direction. This could be the beginning of Cardano's woes. Some of these woes have been predicted by different analysts in the previous year, and now it seems like their prediction was right after all. Is Cardano's future in shambles? After all, this is pretty devastating. Last year, a famous YouTuber and crypto analyst Jason Pazzino warned Cardano users and investors of the impending downfall of the cryptocurrency. In a video, Pazzino informed his followers that the ADA price may drop to its lower 30-cent range or even go further down. Quote, "I don't think ADA is going to hold out. I don't think it's going back above 60 cents anytime soon. Back down to 36 cents. This is a much weaker. Look at that low that came in May, 40 cents. As you can see, it's fallen beneath that, acted as a resistance on the daily chart, and any sort of moves up happens with Bitcoin might be overall less to the upside." Jason also added, and when Bitcoin falls, has those corrections, it's going to be a hard hit in ADA because it's in a far weaker position overall in the macro chart here. And I still think ADA is looking like it's going to fall into these teens, or 17 cents, to the lower 30-cent areas. The crypto analyst also noted that if the prices of ADA rises, it will be immune from collapse. But otherwise, its collapse is inevitable. According to him, the only thing that can save ADA from collapse is if it can reclaim the previous support levels. Back in 2021, Pazzino was quite optimistic about Cardano. He highlighted that ADA was leading the bull markets alongside Solana and Ethereum. Back then, the token saw strong volume and rallied to $3.10. Pazzino also pointed out the fact that the increase in trading volume combined with a break above the all-time high shows promise for further upside. Quote, "Looking forward, the volume for me is a good signal for the boom. We are potentially consolidating above all-time highs. That's exactly what we want to see." He also stressed the importance of staying grounded while trading, as sky-high prices can often cloud the judgment of investors. But why did he change his bullish tune in 2022 for Cardano? The answer is quite obvious. Cardano was caught in a web of grave problems and no silver lining was spotted. Furthermore, the legendary trader Peter Brandts described Cardano's price as an ugly representation. He stuck to his bearish outlook on Cardano in 2022 and predicted that ADA might see a possible decline below the 25-cent level based on a classic descending triangle pattern on the price charts. Brandts further added that he was only involved in trading Bitcoin and Ethereum against the USD in a factor prop account. Hence, he did not short ADA and stressed that the descending triangle pattern referred to a bearish signal that usually forms during a downtrend as a continuation pattern. Well, the Cardano founder Charles Hoskinson reacted to the bearish chart, voicing out his opinion. Chart people once again forget to remember that there is apparently an entire world out there. It has central banks, economies, and supply chains, and of all those factors have an impact on the markets. "I'm super surprised," he said. While Peter Brandt emphasized his bearish predictions on ADA, he however acknowledged that at times the charts may not work out, but when they do, it is a thing of beauty. But along the line, Brandt's prediction was discarded. Why? A Twitter user in response to the legendary trader recalled his prediction in 2021, in which Brandt forecasted that ADA would dip to 10 cents. Instead, it went ahead to set an all-time high of $3. However, the current situation surrounding Cardano right now seems to work in favor of Brandt's charts. According to Charles Hoskinson, US officials could be sabotaging the crypto industry, causing a greater impact on Cardano ADA. Recently, the Cardano founder reacted to a tweet by Kraken founder Jesse Powell, which theorized that regulators deliberately allow bad guys to thrive further in their goals. Hoskinson responded that it's starting to feel as if the hypothesis is accurate. Quote, "Honestly, it's starting to feel like this is accurate. Fair notice was given for an amount of firms that exploded months or sometimes years before these events." In Jesse Powell's perspective, regulators permitted the bad actors to grow big since it aligns with their agenda. Jesse said, "I have a theory. Regulators let the bad guys get big and blow up because it serves their agenda. 1. Destroy capital resources in the crypto ecosystem. 2. Burn people and deter adoption. 3. Give people air cover to attack good actors. The bad guys are actually on the side. Good guys are the enemy." Powell further added that these bad actors and the crypto sector enjoy a competitive edge that all good actors do not. And with this, they might kill the good guys and suck up users, revenue, and venture capital that would otherwise would have gone to the good guys. Hoskinson stated that the hostility that the crypto industry is passing through was instigated by the collapse of FTX. The FTX collapse, the minute it happened, I knew the entire industry was in for a seriously hard time, he noted. So okay, whether the US officials are the bad guys or not, Cardano investors need to be assured of what they're getting into. Investing into a shambled future is definitely not what they want right now. It's safe to say that Cardano Network has been shifting the blame and faults in recent times. Facing the situation head on while impacting a thread of hope and trust could make things better, at least for the future of ADA. By any standard, the previous year was not a good one for Cardano, and despite a series of positive announcements of upgrades, Cardano has been having real trouble gaining traction with investors in the market distracted by the effects of the FTX collapse. But there is still a lot to like about Cardano, which looks greatly undervalued currently. Cardano has been showing strong signs of organic growth, despite the crypto winter. The network has been leading all blockchains in terms of overall development activity. Despite the string of technological upgrades and developments, it is only natural to ask, why is Cardano getting less support from investors? The obvious answer is that Cardano has always played the long game. It has solely concentrated on slow and steady development and an academic approach to building a safe, secure, and stable blockchain. It does not have a team of high-profile venture capitalists supporting trying to get Cardano to explode out of the blue. Cardano may not have the explosive upside of other cryptos, but it is a trusted blockchain project with intense development. The future looks closer than we might have imagined, and Cardano is still building. So, let's watch out for it. And of course, we can't stop various predictions from rolling out, either negative or positive. But what are your thoughts on this? Let us have them in the comment section below. We'll see you in the next video, but before then, check out our other videos to find out how Cardano is living up to the dream of being the Ethereum killer. And as always, make sure you click on the subscribe and notification buttons.